Donald Trump is back in the Oval Office for a second term, and this is huge, not just for the US, but for the whole world. Now, his return means a big shift from the steady, predictable policies we would have seen if Kamala Harris had won. But with Trump, we're in for a whole new direction. His approach to things like trade, global alliances will look very different. Now, this isn't just a change in leadership, it's a change in the US roadmap with big implications for the world economy. So what exactly does this new roadmap look like? How will it shape the global economy? And more importantly, what will it mean for India? Let's begin. You're watching Informed Investor, initiated by Equentis. With Donald Trump being back in the White House for his second term, and that stirred up quite a bit of excitement, not just in the US, but also here in India. When election results came out, the Sensex saw an immediate positive response. Clearly, the markets were reacting with optimism, but what does it actually mean for us? First, it's important to understand one thing about the US. No matter who's sitting in the Oval Office, whether it is Trump, Harris, Biden, or anyone else, America's approach is always America first. Their leaders make decisions that benefit the US above all else, and that's how they assess their relationships with other countries, including India. So while it might seem like good news that Trump's back in office because he's had warm relations with India before, we need to remember that the US will always act based on its own interests. Now, there's also a common belief floating around that America is somehow on the decline. But that's just not true. Despite the challenges the US is facing, whether that's inflation, high interest rates, global competition, or even political division, the American economy is still incredibly strong. In fact, while China is showing signs of slowing down and Europe is struggling with its own issues, the US has remained resilient. Now, coming to the hot topic of de-dollarization. Now, even with all the talk about de-dollarization, which means that countries trying to reduce their reliance on the US dollar, the dollar still holds its position as the world's main currency. As you can see on this chart, of all the official reserves on a global basis, the USD reigns supreme at about 58%. So the US dollar is still powerful and it's not going anywhere anytime soon. Now, why am I talking to you about this and why does this all matter to us? Now, because the US economy is so large and influential that whatever happens there has ripple effects everywhere, including here in India. Whether it's trade, investments, or technologies, the choices that US makes also impacts us. So let's talk about how the US elections will impact India. So President Donald Trump has been elected as the 47th President of the United States. Now, this marks his comeback to the White House after leaving in 2020. Now, remember, his exit in 2020 wasn't exactly smooth. He didn't accept the results, and we all saw what happened with the January 6th Capitol riots. On top of that, he's had felony convictions and even survived 2 assassination attempts. Now, despite all of this, Trump has managed to win back the presidency, and it's a pretty big deal with showing just how much influence he still has. Now, if Kamala Harris and the Democrats had won, as we discussed in our intro, we would have seen a steady, predictable path for the US economy because of the continuation of current policies. Now, Donald Trump and the Republicans have a complete different approach, one that could feel like a sharp turn. The plan includes cutting taxes and raising tariffs on imported goods to protect American industry, and this has an impact. Now, let's first look at how Trump policies could impact the US first. As we just mentioned, Trump's approach, similar to many Republican policies, might involve higher tariffs on imported goods and a shift towards a more expansionary fiscal policies. That means the government could increase spending or cut taxes to boost the economy. Now, why does this matter? Well, imposing higher tariffs could make imported products more expensive, leading to higher prices for goods. At the same time, cutting taxes could mean people and companies having more money to spend. Now, both of these factors, higher prices and more spending, could drive inflation in the US. Now, if Trump follows this approach of tax cuts and increased spending, the US could also face a larger fiscal deficit. That's when the government spends more than it earns. Now, this means that the government might have to borrow more to cover the gap, again leading to higher national debt. If you look at this chart, US fiscal deficit has always expanded during Trump's era. So Trump's economic policies could result in higher government spending and increased borrowing, putting pressure on the fiscal deficit. These actions could also open door to inflation and result in interest rates moving higher to try and keep that inflation in check. Now, if Donald Trump sticks to his past economic policies, it could shake things up for Indian markets. Now, if the US raises interest rates to bring down inflation due to Trump's expansionary fiscal policies, it's like putting out a welcome mat for global investors. Now, higher interest rates in the US makes it more attractive for people to invest their money there instead of other countries. In fact, when the US election results were out, US bond yields had already gone up to about 4.4%, which is the highest we've seen since July. So what does this mean for India? Well, when investors start pouring money into US assets, they tend to pull out of other markets, including India. Now, when investors pull out, it can create volatility in the markets and also pressure our rupee. Now, recently, you must have also noticed the headline saying rupee hits record lows or rupee touches 84 against the US dollar. Now, this isn't just a coincidence. Now, foreign investors have been pulling out big money in October from Indian markets. Now, this pressured the rupee, making it lose value against the US dollar. Now, a lower rupee value also means that imports becomes more expensive for India, which can make everyday goods pricier and increase inflation within our borders. So yes, this could be bad news for us. However, do know that while foreign investors have been selling, our retail investors have been extremely strong, pumping in more money, keeping our markets more stable. So yes, this is again a definite plus for us. Now, coming to trade. We all know about Trump's America's First approach and the US-China trade war. Now, Trump's America's First approach is all about putting the US first in trade, which could mean more tariffs and trade restrictions, especially targeting China. In his first term as a president, Trump hit China with tariffs ranging from 7.5% to 25%. But this time, he might go even bigger since there are talks of a 60% tariff on Chinese goods. Now, China's economy is already in a weaker spot compared to a few years ago, so a 60% tariff could be a serious blow. In fact, experts like Barclays are predicting that this kind of tariff might actually shave off around 2% of China's GDP. Now, since India is also part of that global supply chain, any big shakeup in China could ripple over to us since it is a manufacturing giant. Now, if China's economy takes a hit, we might see some impact on our own exports and trade relationships, so it's definitely something India would feel as well. But here's the flip side. Now, if the US puts more pressure on China, companies might start looking to move their operations out of China to avoid those heavy tariffs. And guess who's on top of their list for alternatives? That's right, it's India. Now, we've got a big consumer market and there's a lot of government push here towards making more things locally. So this could actually bring more foreign investment our way as companies try to spread their bets outside of China. Here's where it gets tricky again. Now, Trump's focus on Make in America could mean higher tariffs on some of the goods we export to the US, especially things they might want to start producing at home. Now, India currently runs a trade surplus with the US right now, which basically means we sell more to them than they sell to us. Now, Trump might look at that surplus and try to reduce that gap. But we feel like this could be a big picture. While all of this could bring some short-term challenges for us, it could also actually set us up for some longer-term gains. As more companies look to diversify away from China, India could see a lot more involvement in global supply chain. Now, our consumer market is growing and our manufacturing sector is getting a big boost from recent reforms, so India has a lot going for it right now. Now, coming to oil prices. Now, Trump has always pushed for US energy independence. He's big on supporting oil, gas, and even coal by cutting down regulations. And he's also made it clear that he would like to exit the Paris Agreement, which shows his focus on fossil fuels. Now, with all that support for US fossil fuel production, we would likely see a boost in American oil output. Now, when more oil hits the market, prices tend to go down. But that's not the only factor. If Trump reintroduces tariffs or makes moves that could slow down global economic growth, this could bring oil prices down even further. Now think about it. When economies slow down, they need less energy overall, which means less demand for oil, which means low price. And then there's China. The economy has already been under strain since the COVID-19 pandemic, with only modest success from their stimulus measures. Now, if Trump puts more pressure on China, it could weaken their oil demand more. So what do we have here? More oil supply from the US, possible tariffs slowing down the global economy, and a drop in demand from China. Now, all of this points to a scenario where oil prices might stay low or even drop further. But here's a silver lining for India though. Now, since we import more than 80% of our oil requirements, lower prices means we would spend less on these imports, which could help balance our trade and ease inflation. So while Trump's policies might be tough on the global oil market, India could benefit from resulting lower oil prices. Now, we do know that Indian companies derive massive revenues from the US. TCS, for example, derives 51% of its revenues from the US markets. And this is in the same line as Wipro, Infosys, and even HCL. So, American markets are extremely important for Indian IT companies. Now, low corporate taxes in the US could actually be a positive thing for IT companies. When corporate taxes go down, companies have more money available to spend on things like their IT budgets. This could mean more investment in technology, which in turn could benefit Indian IT companies that have subsidiaries or offices in the US because they can provide services to these US based firms. However, there's a catch. The sentiment around the US visas, especially the H-1B visa, could become more restrictive. Between 2016 and 2020, H-1B denial rates averaged around 18% compared to only 3.2% under the Biden administration. Now, this is important because many IT companies rely on these visas to send skilled workers to the US for certain projects. If it becomes harder or more expensive to get these visas, it could impact how easily Indian companies can serve US clients directly from the US. But here's the silver lining. Now, companies like Infosys and Wipro, which have a higher level of localization, meaning they employ a lot of local talent in the US rather than sending workers from India, may not be as heavily impacted. Now, since these companies already have a substantial local presence, they can continue operating smoothly even if there are stricter visa regulations. Now, this means they can still serve their US clients effectively without being too reliant on sending employees from India. So in summary, while a lower corporate tax rate in the US could benefit the economy and Indian IT companies working in the US, the visa situation could bring some challenges. However, companies with high levels of local staffing like Infosys, Wipro should be in a much stronger position to handle these challenges. Now, with Trump advocating for reducing dependence on China for pharmaceuticals and medical equipment, India could also step in as a strong alternative supplier. Now, given India's significant role in supplying generic drugs and active pharmaceutical ingredients, this shift could also open up new export opportunities and strengthen India's position in the global pharma supply chain. However, there's a risk we need to watch closely, which is potential US drug price controls. Now, during Trump's first term, we saw efforts to control the prices of prescription drugs to make them more affordable for Americans. Now, if similar measures are reintroduced, it could impact the profitability of pharma companies exporting to the US. Now, price controls may limit how much companies can charge, which could also squeeze profit margins. So while there's a great opportunity for growth, any changes in the US drug pricing policies could present a headwind for Indian pharmaceutical exports. Now, the US policies and global trends bring both opportunities and challenges for India. On the positive side, sectors like IT and pharmaceuticals stand to gain. The US focus on America First trade policies and a shift away from China could mean more business for Indian IT firms, even though stricter visa rules may add some friction. In pharmaceuticals, India can take advantage of reduced reliance on China for drugs, positioning itself as a key player in the global market. Plus, lower global oil prices, if they continue, would also be a major benefit for India's trade balance and could help manage our import costs. Now, on the negative side, high US interest rates and bond deals make US investments more attractive, potentially pulling foreign investment away from India. Now, this outflow could be intensified by a strong dollar, which will put pressure on the Indian rupee, making our imports, especially oil, costlier. Now, rising inflation in the US can also spill over, weakening the rupee and increasing overall cost for India. Now, in short, Trump policies will create both opportunities and risk for India. While we may see some bumps in the road, now India's unique position in the global market and its growing economy gives us a solid foundation to navigate these shifts. Having said that, this is me, Merlin, signing off. Take care and stay invested.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.